Hello, I'm Barry Watts with another edition of Watts on Wealth. Did you know many people pay optional taxes in retirement? Taxes that they could have avoided if they had only paid attention. In today's episode, we're going to talk about how to avoid paying unnecessary taxes in retirement. Let me begin by asking you what you think is going to happen to taxes in the future. Over the course of your retirement, do you think that taxes are going to go higher or lower? Our government owes $37,000 billion. That's another way of saying $37 trillion. By 2033, only 9 short years from now, the net interest the government pays will exceed $10 trillion per year. Now, currently, our federal revenue from taxes is only $4.9 trillion. So twice as much money as the government's bringing in now will have to go out just to pay for our interest bill. There's really only one solution to solve this problem, and that is to raise taxes. The nonpartisan Congressional Budget Office says that in the future, the top tax bracket will exceed 80%, and the middle bracket that most of us fall into will be more than 60%. Kind of hard to believe, isn't it? Another source, the head of the U.S. Government Accountability Office, has said that because of all the spending our government has done using borrowed money, that future tax rates will at least have to double. Now, when you went to work roughly 40 years ago, they offered you two things: 401ks and IRAs. They told you that if you'd put money into those two things, that they'd give you a tax break for your contribution. And then they said when you retire and start taking money out, you'll be in a lower tax bracket. Let me ask you another question. Are you in a lower tax bracket today than you were in your 20s and 30s and 40s? I didn't think so. Yet you've been putting money into IRAs and 401ks for all these years and getting a tax break for doing so, only to retire and take that money out at a higher tax rate when you retire. The first tax hike that's coming begins in 2026. It's already on the books, passed by Congress and signed by the president. Your taxes are going up. Any account on which you have to pay taxes in retirement is a problem because you don't get to control the tax rate, and you don't get to control when you take money out of that account or the amount of money that you take out. But you do have options. You don't have to be a victim of higher tax rates. But in order to protect yourself, you have to take action, and the right action. And you mustn't delay. You need to take that action right now. At WealthCare, we'll show you how to strategically integrate tax-free retirement accounts into your retirement plan so you can benefit from this narrow window of opportunity to cleanse your retirement of taxes now before tax rates begin to rise. If you'll call us, we'll help you evaluate your options and decide the best course of action for you. Reach out to us today by calling 417-882-1726 or visiting our website at savingyoutaxes.com, where you'll find additional ways you can connect with us. If you like this content, please subscribe to our YouTube channel, Watts on Wealth, or go to savingyoutaxes.com for more information.